Hello everybody, and welcome back to the channel. This is episode 32 of my investing journey, where I share exactly what I've contributed, what I've bought, what I've sold, if any, the income that I have received in this particular episode, and how the portfolio has performed, okay? And start this week, I'm actually going to add something new to the channel. Later in the episode, I'm going to introduce what I'm going to call my video review segment. Where I'm going to share, the videos. It could be one, it could be two, it could be three, it could be not more than three, but 1, 2, or 3 that I've watched during the week that I think are worth checking out. And then I'm also going to share a video that I personally would not recommend. Okay. But first, let's get into the video. As you can see behind me, this is my position as of the end of this week. As you can see, portfolio has grown up. We'll go into that in more detail as we go through the presentation. As always, none of this is financial advice. For the love of God, do your own due diligence, right? I'm just simply documented my own investing journey and sharing what I'm learning along the way, okay? So, as always, I have contributed my regular $75. Okay, no extra contributions this week. Just another week of consistently adding to the portfolio. Okay. I have to say though, one thing that has not changed since I started doing this in January 2025, through the beginning of this journey and throughout this journey, it's the importance that I play on consistency. Okay. Whether the markets are green, red, or, sideways or whatever direction they're going, these contributions will always go in. And the idea is to increase the contribution every year, if possible, right? And by a modest amount of $25. Okay. Over time, I am hoping that these relatively small weekly contributions, although for me they're not small, they're actually quite substantial, combined to the reinvestment distributions, continue doing more and more of the heavy lifting. Eventually, I would like to stop contributing and let the distributions become the engine, the motor that drives the portfolio. In terms of buys and sells, there were no sales this week. I bought 1 share of HHIC. I bought 2 shares of PayE, and I bought 1 share of AHIS. So this was not a week where I introduced anything new, right? Instead, I just continue building positions that are already part of the portfolio. HHIC adds to my Canadian high income exposure. AHIS continues building on my diversified high income sleeve. And then another 2 share of PE as I continue developing the utilities and infrastructure portion of my portfolio. As I mentioned in recent episodes, I am becoming more conscious of diversification. Wow, that's a word. And making sure that each ETF has a reason to be in the portfolio. Rather than just simply buying whatever happens to offer the highest yield, Now onto the performance of the portfolio. It's been a good week. Last week, the portfolio was up 11.37% year to date. This week, it actually finished a little bit higher at 12.54% year to date. Okay, so that's an improvement of 1.17 percentage points, right? After the huge rally we saw last week, where 21 of my 22 portfolios finished on the green, I wasn't really expecting another massive move. I thought the markets were going to have a correction, not a big one, not the big one that we're all waiting for, which is going to come eventually. But a small correction of sorts. So I'm happy. I'm happy that the portfolio was able to hold on to those gains and actually move a little bit higher, right? The portfolio has remained comfortably positive for the year so far. And at this stage, I'm not trying to get overly excited about the individual green wicks, just like I try not to panic during the red ones, okay? I'm just like, I'm just happy, that's it. In terms of distribution income, well, this is the other really positive development of this week, right? I received $56.24. I don't know how many of you remember January 2025 when I think I received like $1 or something like that. Well, we're now at $56.24. And this is for the first round of the bi-weekly distribution for the month, okay? We still have another distribution coming in probably 1 week before the end of the month. Last month, during the same payout period, I received $50.63. So basically, we are up 11.1% month over month, and this is this is actually the number that I'm actually the happiest about. Portfolio values, they can move dramatically, they can go up, they can go down, depending on what the market decides to do. Okay, there is nothing you can do about that. It is what it is, okay? But the main thing that I'm trying to build is a growing stream of cash flow. And that, ladies and gentlemen, is actually working pretty well, right? Every additional dollar of income has the opportunity to purchase more shares, okay? And that is key, which then generates more future distributions. So, as far as I'm concerned, from my perspective, from my own point of view, it's a win-win situation. It's still early days, right? We have an 8.5-year time frame. This is an 8.5-year journey as of today, right? It's still early, but seeing the income gradually move higher, it is exactly what I want to see. So far, so good. In terms of the weekly scorecard, well, last week we had 21 out of 22. This week we've got 12 up, 8 down, and 2 that remain pretty flat. Technically, it's still a positive week. Definitely balanced week, definitely a much more balanced week. This week we have started to see some pretty big difference between the individual holdings, right? And this was nowhere more obvious than between AMD at Broadcom, which I hold AMDY, and AGVY, right? In terms of the top performance, AMD continues to blow my mind away. It was up 5.63%. Sure, true, not as high as it has been, but it's still nonetheless. Again, shows just how quickly these concentrated single stock positions can move. And it's a comment that I have as part of my video reviews, which I will share with you later. I don't know if you remember, but I think it was 2 weeks ago. 2 weeks ago, AMDY got hammered. Like, it was crazy. I think it went down 11% or something like that. But then, since then, it has bounced back strongly. And this is volatility. This is actually why I also keep these positions relatively small. I believe AMDY is less than 2% of my portfolio, right? Next up was HHIC, which was up 2.61%. Then it was HHII, which started slow, but now it's gaining. It's up 2.14%. It's still one of my newer positions. I think I only started building that position 2 weeks ago. And I added it because I wanted more international diversification without abandoning the income side of the strategy. You may remember that I also got VA and VE. And I wish that there was something similar to those two funds from Vanguard, from Global X, or from Hamilton, or from Harvest, that would capture that level of internationalization of a fund. But since there isn't any, that's why I went with VA and VE. VA very nicely went up this 1.95% last week, so that's pretty good. And it's I believe that HHII contributes positively to both VA and VE. Less to VA than VE, but yeah. The rest of the stronger performance, HTIF, fantastic. HTIF is amazing. 6C, HPYB, Canadian banks doing well again. HYLD, QQCL, CMCL, commodities and metals. Wow. Yeah, it actually went up a little bit this week. I was very surprised by that. But then gold was up and silver was up. Silver is again up. It was $60, $65. I think it reached. So pretty good. And then SD, and lastly, Pagey, right? I'm going to talk about the laggards, but the two holdings that remain flat, you may remember, had two holdings that were flat, were HHIS and PAYE. Right? Those were the two that remained flat. And honestly, I'm actually totally fine with that, right? In terms of the biggest laggard, what can I say? Broadcom fell down 8.07%, right? It was the biggest drag on the portfolio. Again, it's a very small position, less than 2%. You know, because obviously AGVY is tied directly to Broadcom. Whenever there is a weakness in Broadcom, it hits straight to AGVY. AGVY has a leverage of 25%, so you know it's a bigger drag, right? But again, like I mentioned, this is where position sizing becomes very important, right? High risk asset, lower percentage of the position in my portfolio. Yeah, and that's pretty much what I'm going to say about that. Now, let's go into my new segment, which is video review. So I watch a fair amount of investing content on YouTube during the week, right? And I have to say, some of those videos influence the way I think about my own portfolio. So going forward, what I'm going to try to do is I'm going to share, videos that I've watched that I would recommend, that I would think do have value, and videos that I personally wouldn't recommend, right? Obviously, these ratings are completely subjective, right? I'm not saying that any creator is right or wrong. I'm simply rating how useful I found each particular video based on where I am in my own investing journey, okay? I will add the links to each video on the description, so you yourselves can go take a look and decide, make your own minds, okay? So the first video that I watched, which was by Gary, it really connected with me, right? Because it challenges the idea that covered call ETFs are only useful for retirees or people who need income today, right? The biggest takeaway for me was that covered calls can potentially serve a purpose during the accumulation phase as well, which is where we are right now. Same with me. I'm currently reinvesting my distributions rather than spending them. I'm not there yet. Some people would say, well, then wouldn't growth be better? No, because the objective is by the time I'm getting ready to spend my distributions, I will not sell my assets. I will use the income that is being produced, right? Also, what I like is that that particular income is being used to gradually purchase more assets and hopefully build a larger future income stream, right? I also agree that I think there is a psychological component that sometimes gets ignored, right? Seeing distributions arrive during periods of market volatility makes it easier to remain reinvested. And that is something that not a lot of people talk about it. There is, though, an aspect that I disagree in Gary's video, and it's around the idea that covered calls have very little downside when it comes to limiting growth, right? There absolutely is a trade-off. We're exchanging some potential upside from current income, but how significant the trade-off is becomes dependent on the strategy that you're following, right? So I wouldn't personally describe covered calls as getting income without sacrificing growth. I describe them as choosing a different return profile, right? But overall, I would say this is, for me, a 9 out of 10. And I would definitely recommend that you guys go and take a look at this video. My second video is a video by Paul. Should an investor de-risk, right? I give this video a 9.3 out of 10, and it's definitely my favorite video of the week. In this video, Paul shows how he has already made a very strong return from PLT, right, which is Palantir. And he has already collected, thousands of dollars in distributions, right? But the way he goes about it is that instead of automatically holding the investment forever, because it had worked, right? He's asking himself some really important questions, right? is the income still worth the risk? We all know that single stock ETFs are very risky, right? And it's because the way, and it's why, and it's this question, right, that really connects with where my thinking is heading. I still want strong distributions, but I'm paying more and more attention to concentration risk, diversification, and total return. Right? There may come a point, I'm not there yet, where taking some risks off the table while maintaining a similar level of income will become more attractive than simply maximizing yield, right? My only caveat with this video is that I don't think personally that diversification automatically makes an investment better, okay? A concentrated ETF can still have a place in a portfolio if it's properly sized, right? Like, for example, I believe in Broadcom and I believe in AMD, right? I think those companies have a very bright future in all of them. So it's okay if I feel that for me, for my risk tolerance level, it's okay to hold these two assets, but a very, very small percentage of my portfolio, right? And this is exactly what I'm trying to do with some of this satellite position, which is AGVY and AMDY, right? But this video actually gave me a lot to think about as to what I want to do, going forward. So I will give it a 9.3 out of 10. Definitely my top pick of the week. The third video that I want to talk about is a video by Leon, right? This video probably reflects the biggest change happening in my own investing philosophy, right? As you know, I'm income first, growth second, patience always. Income is still extremely important to me. But I increasingly see how I don't want to chase yield at the expense of total return, right? That's why I never really invested in, the American ETFs from this company whose name I can't remember right now, where they were offering like 93%, something 100%. That was crazy. I could see that there was no way that was going to be sustainable, right? I like how Leon talks about simplifying his portfolio, reducing overlap, and asking whether every holding still deserves a place, right? And that is something that, if you remember, when I presented my strategy a few weeks ago, and I'll leave a bookmark to that video right now, that is part of what I'm going to do in stage 2. Right? Stage 1 is accumulation to a certain point. I believe I gave myself $10,000, and then from 10,000 to 30,000 or something like that, then it's going to be reaching the stage that Leon has reached now, right? Simplifying the portfolio. Where is the overlap? What can we remove? What can we keep? Also, what I especially like was that he compares income ETF against traditional index funds, right? Instead of Leon just saying this ETF pays 12%, therefore is good, the better question becomes, how did I actually perform after distributions and changes in NAV, right? How did this ETF actually perform, right? That doesn't mean that an index automatically wins all the time. It's, I believe we have spoke about this before. An income ETF and a traditional index fund may actually have different objectives, right? But the comparison is still useful. It's always good to see. But yeah, no, I would say, if I have to say, one of the biggest lessons for me was that your strategy doesn't have to stay frozen forever. We are allowed to make changes as we see fit, as things evolve, as markets change, etc., right? We are allowed to learn, because even though man is the only animal that steps twice on the same stone, it is only by making mistakes that we're going to learn, right? And like I mentioned just a minute ago, I also believe that you're allowed to evolve the portfolio as your goals change. For me, this is a 9.1 out of 10, highly recommended. Now, the only video this week that I wouldn't recommend, that I personally wouldn't recommend, it's this video that talks about HTIF and HYLD, right? And I want to be fair here, because I do actually agree with some of the warnings in the video, right? Kyle raised legitimate concerns around leverage, about strict yields, about chasing distributions without considering total return. And those are all things that investors should understand. My problem was that the argument felt too one-sided, right? The underlying message seemed to be that maximizing total return should essentially be the objective for everyone, right? And I don't agree with that. For me, total return absolutely matters. But income can also serve as a legitimate purpose, right? For someone like me, distributions provide cash flow that can be reinvested and eventually become a larger source of future income, okay? I also didn't particularly like, and this is something that I've actually wrote in Kyle's comments several times in other videos that he's done. I don't like the dismissive tone towards other income investors, right? I don't like how he calls income investors degenerative clowns. And while he called himself a clown too, I don't know, it feels like you're being very dismissive, right? You can critique an investment strategy without dismissing the people that are using it. And I think that, for me, a much better message would have been, covered call ETFs can be useful, but understand what you're giving up. You have to control your leverage. You have to watch your total returns. And don't confuse a high distribution yield with investment performance. And that would be a message that I would have completely agreed with, and that would have made this video a great video to watch, okay? As it is right now, there were, I'm going to give this video a 5 out of 5 out of 10. I personally wouldn't recommend it. Yeah, and I'm just going to leave it at that. So, in terms of the takeaway, right? Coming back to my own portfolio. This was a positive week overall. Portfolio increased from 11.37% to 12.54%. AMDY still the biggest winner. AGVY was the biggest loser. Income went up. The diversified income of the portfolio helped balance some of the volatility. And that's ultimately what I'm trying to build, right? I'm not trying to build a portfolio with the highest possible yield, a portfolio with the highest possible growth, right? But something that gives me income, growth, and diversification, right? And that's a strategy that I can realistically stick for the long term, okay? So thank you so much. This is it for episode 32. If you like what you saw, please do not hesitate and subscribe and give us a like. We are trying to reach 100 subscribers by the end of the year. And I will see you all next week for episode 33. Will I see you all next week? Actually, I'm not going to see you all next week. I will see you all on the first week of September because I'm going on holiday. That's right. Even us poor people deserve to take a holiday from time to time. I'm just kidding. No, I do deserve to take a holiday from time to time. So I will not see you next week. I'll probably see you in a couple of weeks. What I'm going to do next week is I'm going to upload a portfolio of the tools that I use that help me with my strategy. So I'll pull that in next Saturday as one of those videos that you record and then you're like, a schedule for later. Okay. Anyways, thank you so much. Take care. Bye-bye now.